All right, guys, welcome back to the channel. We're looking at how the Bitcoin cycle is continuing to repeat as per prior cycles, but it's a little misleading in the title because although it's not repeating exactly, it's actually a little worse this time in regards to the speed of the decline. But I don't think it's anything to worry about because the same signals continue to show up as we transition from one state to another in regards to a downtrend into an uptrend. And so what we're looking at today is a whole host of signals, but I'll focus primarily on time and price so that everyone can keep up and we'll get through the data. Price, looking at the previous reactions, and then also time as well with how long the collapses have taken to occur. So without further ado, hit the like button, subscribe to the channel. It's your home of macro cycle analysis. Make sure you watch each of the day's videos to keep up to date. Otherwise, I don't want you falling behind and just looking at titles and thumbnails. All right, let's dive into what we're currently looking at, and this is the rally. So this is obviously one of the best rallies in regards to a bear market that Bitcoin has experienced from the low to the high. It's about 3 months so far, and call it 38%. We're not there yet, but 38% is close enough. Nearly $23,000 increase. But the two important areas where points we're discussing today is the time and the percentage gain to the upside, because all prior cycles have seen very similar things when it comes to the rally, the counter trend rally. Lows to highs, as you can see here, was 46% in the prior cycle. Of course, prices are slightly different now. We're at a higher market cap, so there's going to be lesser gains in the bear market rallies, but nonetheless, it's quite relative to prior cycles. 2022, 46% increase. That was the first rally. Then the market collapsed once, held out for a few weeks. Also had a smaller counter trend rally here, 28%, still pretty significant. Got people hopeful, and then it collapsed again. Bitcoin also went on a 43% rally for several weeks. From this collapse low in June to the high, it was about 2 months. Then, which was 43%. So even larger than what we've seen this time round. Of course, it's from a low price, but you saw two significant 40+% rallies in the bear market, which continues to drive the bullish narrative that there is hope that you've caught the bottom. That's usually the case. From that point, in a time frame, the market took 5 months to get to the next low. So we'll look at the time frame from low to low as you begin to see a bear market bottom, round out, and then rally in the opposite direction. Of course, that's not the only few things that we need to see. We need to see money coming back into the space, and we need to see interest coming back into the space. Without those two, well, you basically don't have a market. No money, no interest. What do you got? You got nothing. So the prior cycle, 2018, you saw a bounce of 100%, 54%, and then a few minor bounces within the trading range. Again, 48%, a smaller one here of a few weeks, 26%, a couple of minor ones before it collapsed into the low. Now, this is going to be an important one to come back to look at these timeframes between lows. In 2014, again, another 100% move, another 70-odd% move, and there was several others within it, but shorter time frames, still significant bounces, 80%. Even the first one was quite significant, 120%. So pretty significant moves there. And those two cycles look somewhat similar when you compare the bounces in percentages. You got triple digit, 99.77, call it 100%. There, 70%, 50%. So pretty similar bounces there. Now, the last cycle in 2022, we're kind of tracking obviously a little bit more closer to that. You got 46, 43, a 27%. This time we had a 21.5%. We saw some smaller bounces earlier on in the piece, back when Bitcoin was topping and we were watching the 3-bar down signal. Not to get too sidetracked here, but each of those TIA 3-day down signals called very significant tops as we watched the sellers take control. So transitioning from the bull market to a bear market, and that's precisely what we're looking out for again as we approach what I think is going to be the next low. So those have called basically all of the prior very important turning points, if not the all-time highs, the very significant tops within that trading range. So back to the price ranges, we've seen these rally, and this cycle looks a little similar to 2022 with those rallies. Now, in terms of the time frames, so the low, you got the low that came in, and we measure that to see how much the market may rally from that low in a bear market, giving us that counter trend rally. Because as the counter trend rallies occur, obviously people have tried to catch the bottom along the way. Catching falling knives can obviously give you a much higher average price. So you're trying to catch it as it keeps falling every day or two. There's a pretty good fall on the way down. You go, I'm going to buy this. And then you end up with a higher average price. So as the market bounces, these guys that have got the average buy price is very high, may have bought each of these lows. Now they're getting closer to their break-even price, even though they bought some of the lows. So naturally that brings on more of the emotion to expect that the low's in and we're just going to race to new all-time highs. It hasn't happened before. It can happen, but it depends whether you want to use probabilities or not. You want to try and make a home run, then you think it's going to happen once in a lifetime, go for it. Otherwise, you look at probabilities, because over the long term, if you trade for decades, that's where you're going to remain in the game with money. The swing and the hits, one swing, one hit, it doesn't work out at all in the long run. So time frame, low to the next low, we saw a 100% rally. Then it took several weeks until it collapsed into this bar here in August. So that was 4 months. 4 months low, you peaked, started to come down, was holding out hope. I explained the emotions on how hope holds out for all of that time. It's now at 4 months, which is longer than what we're currently sitting in right now in this bear market rally of just over 90 days. First collapse bar, holds out for another 1, 2, 3, 4 weeks. Another collapse bar, holds out again for a week, and then finally collapses and breaks the low. That was nearly 6 months before it broke to a new low. So we're not looking at price now, we're looking at time and how long it takes to wear on those who had bought and are now hoping that the price runs high. Because at the end of the day, that's what the markets are about. People are working with their emotions, and it takes time to crush emotions, whether it's the greed or the fear. And that's essentially what we chart when we look at TA. It's not about hocus pocus. It's about charting to see what people do over and over and over again. So we get 6 months until the market breaks down into that new low. Okay, they're worn out. We see a bounce. That bounce lasts about 6 weeks, 42 days, 6 weeks. Then it holds out again for another few more weeks, starts to break down. You're getting closer to that 3-month period. And as you hit 3 months, it then breaks to that new low. And it takes another couple of weeks to get to the final low, giving you about 105 days from the break of the low to get to the next low. So it got slightly shorter here because you had a longer rally, and then the decline, and then it broke down. So in those two occasions, 6 months and then 3.5 months to get to that low. 3 months to break the low, 3.5 months to get to the next low. In 2018, there was a very quick low. So similar to 2014, a lot of hype. The market flushed out very quick, got rid of all of the excitement very, very quickly, and then held out for some time before it was able to break the low in June. And so that's the next important piece of the puzzle, is that we're getting similar dates, similar months where you see these lows occur. February is the current low in the market. You can see there, week of Feb, and it's rallied from that point. We've seen it many, many times before. Even through 2024, it was late January into that early Feb, things were still rallying. They rallied through March. They held out in March. Then they got to some peaks in late May before declining. And that's in a bull market. So you're seeing very similar patterns play out, whether it's in a bear market or a bull market. The only difference is in a bear market, you get a smaller increase compared to a bull market, because you're in a bear market. Therefore, the gains are going to be less than in a bull market. And that's how you know you're in a bear rather than a bull. And so back to 2018, looking at this low from Feb, market rallies, holds out again, decline, it's getting very close. It rallies again, gets you to around the 3-month mark. As you can see there, you've got 84 days on the chart. And then it begins to decline, fade, starts to crush all the hopes, because everyone that's bought the bottom thought they bought the bottom in Feb, also thought they bought the bottom in April, which is similar to now. We also saw a higher low in April, get a little worn out here. And by the time you get to June, it's put in a new low. And that new low occurred about 4.5 months later from that low. Market rallied again. And then you've got the grind out here where things get pretty boring over that Q3 period, the summer for the Northern Hemisphere. And so if we take another measure from the new low, because we know that this low here was 4.5 months, it took another 5 months to break down from this hope. So the market was holding, rallying, falling back close to the price, rallying again, falling back, getting into tighter trading ranges as less and less people are interested. And we see the search volumes drop, as we've covered many times before with the Google search volumes. When you're seeing this drop, it's usually not a sign that the market's ready to bounce to new highs or break significant turning points in a market that allows us to confirm the transition. We can be in a transition, but we don't have confirmation that the transition has occurred yet. So 2018, we have a measure of 4.5 months from a low to a low, and from a low to a breakdown was nearly 5 months. To get to the next low, nearly 6 months. So it basically fell for a month. Break of the low, 5, to the next low was 6. So in 2022, the low to the breakdown point was, we've seen this figure before, 3.5 months. And that was also the breakdown and the low. Held out for 3 weeks, broke down on the 4th, broke the low on the next week. And that gave us 140 days. So nearly 5 weeks to get to that low. Now you could call it the 3.5 months, or the 5 months, I should say. Either way, you've still got a long period of time from the low holding to the first breakdown till you get to the final low. And I say this period here for the final low being June, because it comes up quite often with a June timeframe to measure from. And from that June timeframe, we had a longer consolidation before the market broke down. So you had this consolidation, a rally of 2 months, tried to rally again after the pullback. That was another 3 months, fell back for a week or two, tried to rally again. That was 140 days. And finally, you get to the breakdown in November, which is nearly 5 months. A short week later, and then you get the final low 160 odd days later. So calling it 5 months from the breakdown of that low to get to the final low gives you pretty similar timeframes from each of the prior lows in that cycle. So measuring from June to the prior low, 140 days. From June to the breakdown, 150, 160 days. Pretty similar timeframes there for the market to break to the low, find support, and then break down. So where are we right now with the price of Bitcoin? And then what would that look like if we forecasted out similar dates over 2026? So we have the low in Feb to the prior low was about 77 days. So as I said in the intro, this was one of the fastest declines that we've seen in a Bitcoin bear market. And it's at its new all-time high price from October 2025. I think, well, at least from the technicals, if it's going to be holding out with a strong pattern, you'd expect the market to not fall as quickly from these highs. And we saw it fall 50% in very quick fashion at 77 days, less than 3 months to get to that low. You'd expect it when the market was quite young. It was acting more like an altcoin back here, collapsing 70% quite quickly, high to the low. There it is, 72% back in 2014. And in 2018, similar sort of thing again, 70% in just a matter of weeks. But I wouldn't be expecting that in a mature market that has all the hopes and the dreams that everyone promises us, and you still see it fall 50% in about 4 months. So from the February low, market is currently sitting around 98 days, so just over that 3-month period. And now if we forecast out that 3.5 months, that number that came up a lot, well, that would show that next week would break the low. I think that's pretty unlikely, especially with the amount of bullishness that the market has been able to absorb through the last 5-6 weeks into this high up from $66,000. So I can't imagine that that sort of emotion is just going to leave the market in a week's time. I think it's going to take a few more weeks to play out to get to this breakdown. Therefore, I'm still watching the longer timeframes that we've got from the market, which is being around a sort of 4 to 6 month period, but measured from February. So February low to 4 months takes us out to about mid-June to break the low of February. So mid-June there, you can see there, 133 days to 140 days. So that's the just over the 4-month mark, which we measured on each of the prior 3 bear market cycles. So the second number to keep in mind is the 160 to 180 day count, meaning about 5 to 6 months. So mid-July up to mid-August to break the low. Now we know it can take another couple of weeks to get to that final point, but for all accounting purposes, that basically takes us to Q3, which is the time frame, the forecast that we're watching for that Bitcoin cycle low. So the cycle is basically rhyming. I mean, rhyming in a title doesn't work, so you just put repeating. I think you guys that have watched this far in the video get that. So we're watching how the cycles continue to repeat here, and that then gives us a price range to watch, which has also occurred in previous cycles. So let's go ahead and take off all of these and then put on the price ranges from prior cycles so that we can start to get a read on where this price usually comes down to. So starting with the 2014 cycle, we've got it on a linear chart now. There's log linear. We'll bring up the fib retracements, and this goes back to the start of the cycle to the peak. And you've got the 50% to look out, and then also these white figures here. So you can see the white just behind my head. There it is. This is the bear market low in 2015 from the peak in November 2013. You can see how much it's reacted to each of these levels. 50% hit the level, fell, rallied back, continued to fall, tested the 25%, which is of the range, you're watching it fall about 75% from the high, okay? And then it found its cycle low and its own trading range between the 12.5% and 25%. And they're going to be important figures to watch for each of the prior cycles as it continues to climb slightly higher, because we have that diminishing returns effect from the highs. So that's 2014. You can see the trading range of that year between 12 and 25. Now, if we go to 2018, we put our fib level on, 2015 to 2017 and the 2018 bear market. Again, failed at the 50%. It fell through, continued to fall, got rejected at the 50%, and then continued to fall again. So again, in 2018 and then early 2019, the bear market bottom was found between 12.5% and 25%. Last bear market, confirmed bear market of 2022, using the range of 2018 low to the 2021 high. And what do you know? Again, we see the market fall between the 12.5% and 25% of the fib. This time, however, didn't last under there too long. It tested it for a few weeks and then bounced back above. The bounce above, that first week where you see it start to climb out of the bear market and you really see the rotation, the transition from that bear to a bull, even though most people were not expecting a bull market to begin there, that week was still a 22% gain. But you're coming off very low lows with average ranges so low, it's pretty crazy, right? You can see the average true ranges here continue to fall through that accumulation and reaccumulation of the bear market into the bull market. So that's another sign that you'd want to see for a transition of the downtrend to the uptrend. Okay, 12.5 to 25% there, hits the level, consolidates, and starts to break out. So we're looking at between 25 and 38% range for more time to be spent for price in that zone. because you start to see less and less of it with the cycles progressing. So where does that sit us for this current bear market? I know some people don't call it a bear market, but for the purposes of a chart that is in a macro downtrend without having broken any prior macro swing tops, it is in a bear market. And the top that it would have to break would be above $98,000, right? So here we are. And you can see the figures on the side, which is the price targets that I've been quoting over the last few weeks after this rally has overbalanced the prior rally. So another sign that we're beginning that transition. Although we're still in a macro bear, you can start to see signs that the bear is weakening, but not dead yet. So that price range is between $43,000 and $58,000, right? We could see under, which is what each price cycle has done. Remember, it's gone under the 25%. So that's under $43,000. Seems very unlikely that we would go and test the 0.125, basically the 12.5% level. We've seen that in earlier cycles, but it was less, it didn't even get close last cycle. So last bear market was sitting at 11,300, never got anywhere close, sat around 15,500 to get to that, that low would have been another fall of about 27% from that bottom. So it seems a little unlikely this cycle, which is why the price targets are around $43,000 to $58,000 for this low, should we see a breakdown. So all in all, cycles seem to be repeating in time. They seem to be repeating in price. What else can we see? Liquidity. Liquidity also seems to be repeating. You can see this is the USDT dominance, and we've been tracking this for the entire bull market and bear market this time around. And as the bottoms were coming in for this chart, we were noting that it was looking very similar to last cycle, where we saw the lows and the higher lows begin to form before it broke out, consolidated for a moment, took its time, ran to the highs, like it did here, ran to the highs, pulled back, again pulled back, and then decided to break out. And that's what happened here. It broke out. So we're in a pretty similar pattern now with the liquidity in the stablecoin market. And should we see another sign that the transition is occurring for the bear to the bull, I would expect to see a break of the 6.5% on the dominance to begin to confirm this signal that the liquidity wants to come back. It might not be time yet. Like you could see here, this happened in July 2022. And then the dominance for USDT came all the way back. Bitcoin put in new cycle lows, and it took quite some time before the liquidity was ready to escape the stable coins and then start to run all the way to Bitcoin and cryptocurrencies, right? That's the pattern there. And we haven't done anything different this time. The cycle continues to repeat in the liquidity space. So we've looked at price. Things have happened again. Liquidity, basically the same thing. Time, basically the same thing again. And we've also got the crypto industry, the Senate Clarity Act coming up in the next day or two. And if this happens to be a buy the rumor, sell the news event, that would just be uncanny, especially for this clarity thing to come up right on cue with the 200-day moving average. We know Bitcoin has just tested that a couple of times in the last 7 or so days. 6th of May, we saw it again on the 10th of May on Sunday, and we saw it again on the 11th of May. Haven't had a break above it yet. And right now, as I'm filming this, just a bit of a red move here. A break below 79,000 is going to be the first sign that things may be getting weaker. You can see this line through 79. You've got a couple of tops here. This is in the short-term analysis, a couple of bottoms, which could mean breakdown. Maybe it wants to retest 200 again, because I think there's still a bit of time to wear out the bullish sentiment that we've seen over the last several weeks, taking us to the 200-day moving average for the first time this cycle, which is a typical event that happens every other cycle, but just a little earlier on in the piece. 2018 actually broke it, sat on top, came back underneath, tested it a couple of times, and then faded out. 2022 broke underneath, came back, tested it. 2014, it was also there, ran just above it, stayed above for a couple of days, broke underneath, stayed above for a bit longer, also broke underneath. So again, even with the price action on the moving averages, things are still lining up very similar here, down at 80,900. Clarity Act coming up in the next couple of days could be that piece of the puzzle that just lets this thing loose. The search volume also dropping off, which again isn't a sign that the market's ready yet. Nice to see in a transitional period, more people may be beginning to look at it, but we need to see higher lows, higher highs begin on those breakouts along with volume breakouts. Now, we have seen a few days up here on the exchange volume, which is at least good signs that we might be putting in a base. The base is from around 22, which is ideally, you don't really want to go any lower than this because then we get back to the same prices as last cycle. And you really don't want to be going backwards at this point in regards to volume, because that would mean that there is less people putting money into it. Yes, there's always the argument about ETFs and so on, that the money's finding other ways into Bitcoin and cryptos, but nonetheless, it should still be coming through in the exchanges, because you can see this is made up of the biggest ones here: Binance, Coinbase, Bitfinex, and so on. You need to see more and more volume coming back into this. And so far, since that peak in early 2021, we've only seen lower highs, right? Price has gone slightly higher for Bitcoin, but really not by much, considering how much money we've got recorded going into ETFs. It really isn't enough here to show that the market has got enough staying power yet. Ideally, it does turn around. We see more money coming in here. We also see more coming back into ETFs and so on, to at least hold this game through for another cycle if we can. But at the end of the day, we just got to run with what the market's doing, not with what we want. And the fear and greed, the sentiment also looking okay here. Similar patterns again to 2022. We've seen the market rally. We may begin to see it pull back, should the price obviously pull back. But so far, it went through as extreme fear in single digits, which is what we said, like last cycle, extreme digits, single digits in extreme fear, which then showed a low, which then showed a higher low as Bitcoin was making a lower low. But you can see the divergence in how people were treating their money in the markets. They weren't as fearful anymore. Prices were still down, but they were buying it up and beginning to buy at slightly higher prices as the fear left the market. So I think that's happening again. I think we're in that transitional period. How much lower does it go? I've given you some price targets in this video to watch, or exactly what I'll be watching in future videos as well. Make sure you like and subscribe to the channel. Also, check out my Instagram. I've got a few more reels going up there, especially with the budget tonight in Australia. I know it's not worldwide news, but here they are changing our tax laws. For the better? I don't think so, but we'll discuss over there. Other than that, I'll see you guys back at the next video to discuss more on the macro cycle here, with the stock markets also climbing to fresh highs. How much further does this have to go? I'll leave it for another video. But thanks again. Like, subscribe, take care, and peace out.